Como assim, menina? They don't feel stable yet. Thank you. Thank you for remembering. All right. You done? Good morning, everybody. Nice to have you guys here. Welcome to the very first free physical edition of the Sunshine Structure Strategy. We're so pleased and honored to have you here. About value flow trading. Value flow trading is a tech-driven digital education and financial research firm that started operation in 2022, sorry, my bad, in 2022. VFT has since grown to become a formidable brand in this industry, boasting a well-trained and equipped team of traders and marketers. Our mission is to create a sustainable, transparent, and peaceful platform for traders and investors to attain their financial goals. And our mission is to become the one-stop shop for everything financial markets trading. These are our seasoned tutors. Some of us will be training you guys here and taking you through this training today. The purpose of this training, we're all here because we want to gain financial freedom, of course, and we really want to achieve that via forex trading. Definitely, you're here because you want to achieve financial freedom via forex trading. So I'd like us to introduce ourselves one after the other, and then you tell us if you're a beginner trader, an intermediate trader, or a professional trader. So we'll be starting from you, sir. Please, can you tell us your name, where you're from, your status as a trader? No, you can sit.
Hello, everyone. My name is Gerald.
Okay.
Novice trader. Started not too long ago. I started this year. So came across value flow trading. How I've been following them on Facebook and saw this opportunity and yeah.
It's really nice to have you here. So what would you like to be called in course of this training?
Gerald.
All right. Nice to meet you. Next person. Morning. Yeah. All right. Nice to have you here. What would you like to be called? Good morning, sir. You will like to. No, no. What would you like to be called in course of this training? Nice to meet you. Thank you for coming. Next. Good morning. Nice to have you here. What would you like to be called? All right. Nice to have you. Next person, please.
Hello everyone. I'm Jeffrey Nunasom. A mathematics student at NABU, and I know nothing about trading, especially forex.
Okay.
So, and I've been wanting to like learn about that, but time and everything. So, I got this. I saw this flyer from one of my colleagues. So, I said I should take this opportunity to like learn about that. So, I'm happy to be here.
Nice to have you here.
Thank you.
Good morning, everyone.
Morning.
My name is Jonah Yabo, and Um, I'm a beginner trader,
Yeah.
and I'm here to learn forex. I'm the guy next door.
Nice to have you here.
Thank you.
Next person.
Thank you. My name is your son Emmanuel. I am here in Zaria and I'm intermediate trader. I can be called your son as well. Thank you.
Nice to have you. Last but not the least. Good morning.
My name is Adanjuma Bulus, and actually I based in Zaria here. I would say I'm a novice and just curious about, just want to learn forex. So I saw a friend of mine just, okay, guys, this is what is happening. So I just decided to.
Nice to have you here. Well, my colleague will be coming next. So enjoy the rest of the training. Thank you. I'm done.
So when we talk about being those are the bank stocks we have or the company stocks we have there, we get them clearly there. Sorry. So we have the stocks and also we have bonds. Bonds like treasury bills of central banks like that. We have bonds and the likes like that. We also have our commodities. Commodities talking about sugar, talking about cocoa and the likes like that we sell from. There are countries that sells cocoa. For Nigeria, for example now, Nigeria talking about our crude oil is part of our commodity. Talking about our, cocoa is part of the commodity. There are also countries that also sell sugar, like wheat. You look at countries like Ukraine, they also base majorly on wheat and the lifestyle. Those are the commodities. And now the next one is cryptocurrencies. Most of us know that, when we keep shouting, you buy the dip, BTC, Bitcoin, Ethereum, and the likes like that, all manner of coin. Maybe someone here is even trying to bring up another coin now, and we are going to call it, what are we going to call that coin? Maybe we should call it that chairman's name. His coin. Sir? Boss coin. Oh, so when we start buying boss coin now, we are going to pray that it doesn't enter the deep. So it should just be going to the moon. So that's what cryptocurrency does majorly. And we also have synthetics too. Synthetics, we trade synthetics. And we have training for that here on the floor for synthetics, where we trade V75, is 100. It's part of our courses that we have across board. But majorly for this training, we are focusing on forex, which is foreign exchange. Now, what does the forex really based on? It's simply me, I'm buying and selling currencies. Buying and selling of currencies. Simple. I buy and I sell currencies. For example, now you have had, okay, a naira to a dollar. Current exchange rates now, we have 755 to 750. So meaning if I have $1, I'm going to pay 755 naira to buy $1. So if you do that, probably you carry your 755 naira to the aboki in the market or by the roadside. They give you $1, you give them 755. You've actually you've done what everybody knows to be forex. That's just as simple as it is. Now, what we are now trying to do now is bringing that system on your computer. And in between that, now you are now connected to the global market where you can easily buy a currency and sell another currency. Are we together now? So when you begin to do that on your system, then you have now come into trading proper. Because what you are simply doing is you are buying a currency and at the same time selling it. You get the point now? And that makes it possible. It's not that every one of us, we don't have enough liquidity. What do I mean by liquidity? Enough capital to do that huge sum of transaction. And that is why we have our brokers to help us with that. And the broker we are using here is Equity Broker. So we'll be using Equity Broker all throughout this training. I believe every one of us, we've downloaded the trading platform of Equity Broker. And if some of us have not done that, in the course of the training, you definitely have to do that. Get it now. So Equity Broker will help you. Instead of you don't know any white man that wants to sell euro now. For example, you want to buy and sell Euro USD. You don't know anybody who wants to sell Euro USD now. You get it now? You don't know anyone who wants to sell Euro. Neither do you know anybody who wants to buy USD. You get the point now? But when you come to equity broker on the platform, yours is just to show your interest. Okay, I want to transact on Euro USD. An equity platform have everything needed for you to do that. All they just do is take your trade. When it goes your way, make your profit. And what we do majorly in forex is what we call CFD, contract for difference. Meaning that when I buy at this particular point, let's say I buy 1 Euro USD at the rate of 1.3215, and it goes up to 1.3515. So the difference between the price I bought it and the price I want to sell it is my profit. For example, now I bought this phone maybe from PZ at the rate of 50,000 naira. Now I came here to the class, I sweet talk everybody, oh, this is the new phone in town now. You can use it to, capture someone from flyover right from this place. You're going to see it clearly. It's much more better than iPhone 5. Everything, And I'm going to tell you, oh, how much is it? I'm selling it for 75,000 naira. How much do I buy it? 50,000. Now I'm selling it for 75. The difference between that price I bought it and the price I'm selling it now, it is my profit. And that's exactly how this industry works. So it's not a guesswork, it's not gambling. You definitely know what you are doing and you know where you are heading to. You get a point now. So that's what we'll be taking you through today. So what is forex trading? So forex trading refers to buying and selling of currencies on the foreign exchange market. It is buying and selling of currencies on the foreign exchange market. It is the largest financial market globally with an average daily turnover of trillions of dollars. Meaning that the largest financial market globally, any and everywhere globally, is the largest financial market. What does that mean? Simply that currently, you don't have a market that has a turnover of this particular amount on a daily basis. That is trillions of dollars, not trillions of naira. Trillions of dollars, punch your calculator. Maybe you should just choose $5 trillion. Punch your calculator with the exchange rate. All you just be seeing is E, 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 meaning error. Your calculator can comprehend that. But it is the largest financial market globally, meaning that with the help of our broker, you get everything you need to know and how you are going to do it well and here. So the forex market operates 24 hours a day, 5 days a week, and it allows individual and institution to profit from fluctuation in currency exchange rate. What I just explained earlier, that the market is open 24 hours a day and 5 days a week, meaning from Sunday evening till Friday night. Get now, Sunday night till Friday night. What do I mean by Sunday night? From 11:50, the middle of the night, you begin to see the opening of the market, begin to see your charts, reading that way. So that's how it moves that way. So from Monday to Friday, the market is open, you can trade, but Saturday and Sunday is the break in the market. You get it now? So the market is closed during weekend and it resumes again on Monday and we keep moving. So who are the key participants in this market? That is, I'm not transacting with dead men, neither am I transacting with spirits. Who am I now transacting with in this market? So in this market, the forex market involves various participants, including banks. There are banks that trade forex, including the bank in your mind now. Yes, those banks you are seeing along the way, those GT, all those banks, they also trade forex. That's it. So corporations, retail traders, central banks, they also trade very well. And if you look at it very well now, from the banks, let's start from the banks. The banks, they trade forex. How do I mean? When you go to the bank and you want to make any exchange, you go with your naira, probably you are traveling out of Nigeria and you need dollar or you need pounds to go to the UK, or you need dollar to go to US. Now, what you just do is carry your equivalent naira, go to the bank, and they are going to make the exchange for you. Just that it is what it is. We are in Nigeria, and sometimes you may not get it at your own rate in the bank. So most people use the aboki by the roadside. So we also have corporations that does that. The corporations that does that, like the regulatory body in Nigeria now, is what we call BDC, Bureau de Change. Maybe some of us have had that before. So we have corporations that does that very well, and also companies too that import their, raw material from abroad. They get it done that way too. So they are also participants of the market. They are also part of those who trade the market. Also, retail traders. Retail traders, that is the category you and I, we are. We are the retail traders. How? Because if you want to buy £1, or let's say a large quantity of it now, you don't have enough capital to do that, but with the help of your broker, you'll be able to do that. Your broker gives you what we call leverage, meaning that if I want to buy Euro USD, let's say one lot of Euro USD, I'm still going to explain those terminologies, but I'm having just $100 in my account. How will I use $100 and I'm going to use one lot to trade, let's say $1,000 or $100 of Euro USD? Doesn't correlate. But with leverage, you can actually do it. What does that mean? Meaning that Equity Global, they are going to give you the leverage, like make you have like times 10 or times 100 of that capital, but you are still seeing your capital there, which is $100 that you have in your wallet, but you are having times 10 or even times 100 of it to make the trade you want to happen. You get it now? So that's what leverage simply does. So that category of people, you and I, will fall to that retail trader. We are all retail trader. We are the one who, just cap out, just let me get my daily bread. Give us this day our daily bread. That's what we do in the market. But whatever we get, okay, today I'm not doing much. I got my $50. It's been real. I'm out of this market. But you see banks, they are going to put millions of dollars, you get it now, just to trade on a daily basis, because they have the liquidity, they have the capital enough to do that. So that's the category we all belongs to. And we also have central banks. Our honorable, great Central Bank of Nigeria, led by our amiable Governor Godwin. You get it now. I won't say more than that. Or the Federal Republic of Nigeria, Central Bank of Nigeria, rather. So he also have that too. Through that, central banks also, they also transact forex. They do that very, very well. You're welcome. Central banks, they transact forex very, very well. So they are the one you use also as, citizen to also leverage most times. You get it now. So you get that well. And we also say that corporations engage in forex trading to hedge against currency risk related to international business cooperation. What does that mean? Simply, for example, now, Dangote, if they import wheat for them to produce all this spaghetti and the likes like that, you know that mostly everything we consume in Nigeria, we don't have the raw material here. So most of it are being imported. Get it now? So for these people to do that, they need to go into foreign exchange. They need to convert their naira to dollar or to euro or to whatsoever currency they need to get it from there. They do it there, and when they purchase it, they bring it here and use it for production. The same way we have companies like Toyota. Toyota is not a Nigeria brand. So when they do their production over there, they bring it here, they sell it. When they are done at the end of the year, they convert their, currency, which the profit and everything they make in naira, they convert it to, be it dollar, be it pounds, or whatever they want to convert it to. They convert it there and they go out again. So that is exactly how it is. Forex market is not just what someone just do with algorithm, and at the end of the day is being, you take, I take from you, you take, I take from you. No, you know how your money is being, you know, how it goes and how it comes. Meaning, if I'm saying I'm buying Euro USD now, there is someone somewhere on earth in this world who is also ready to sell the same thing to me. You get the point now? So that's how the market works. That's how we move here. So retail traders, like individual investor, participate through online brokers. That's what I'm trying to say, that we retail traders will participate in this global market through our online brokers, which is Equity Global. We use Equity Global as our broker here. So they are the one we are still going to, you know, encourage you. So when you do that, when you know, open account with Equity Global, then we give you all you still need to move forward in the industry and also help you to gain more edge in the industry. So central bank influences exchange rate and implements monetary policy to stabilize their respective economies. Now, in forex, we have central bank policy that comes into the market. You hear things like bank rates, things like, you know, FOMC, monetary policy, and the likes like that, NFP, news like that. So these are bank policies that regulate their money, that regulate their currencies. You get it now? So whenever those news are coming, it's being advisable for traders, especially we retail traders. It's highly advisable, just stay out of the market and just hold on and see the reaction of the news. There are times maybe you will have been in massive profit. You're already looking at your profit, you know, maybe you just took a trade and you're already having, you know, like $5,000 as profit. In your head, you're already, you know, pricing, okay, I'm going to buy Toyota Corolla with this one. When I finish buying that, I'm going to buy land in Lekki. When I finish doing that, I'm buying a skyscraper, maybe an office in Dubai, Burj Khalifa. And as you are planning all that in your head, you see that profit, you know, still going up. And inside of you, you are hearing close, close, close. You're still like, there's still room. You're going to get it. And all of a sudden, a bank news came out, maybe a bank interest rate came out all of a sudden. And those profits you are seeing there ended up being a loss, meaning the market goes against you instantly. So those are the major news that, you know, make the market very, very volatile at those times they are coming. That's why it is advisable for retail traders. Whenever you are trading and you discover, we are going to show you here too, where to know a news is actually coming, the sites you need to watch out for, how you know the level your profit may get to, or the level you are targeting for profit to get out of the market before the news. But it's not advisable for, you know, retail traders, especially beginners, to start trading news. If you start your career with news trading, you're on your way to your village. It's not more than that. That's just it. That's the simple truth there. You start your trading career with news trading, it's been real. Just wave you goodbye from the industry. So that's how that works. So now, what are the major currencies? You see that the forex market consists of numerous currency pair, but some major pairs dominate the trading volume, meaning that there are major pairs that dominate the trading volume. There are major pairs that dominate the trading volume in forex market, which are Euro USD. You see pairs like Euro USD, like GBP USD, like USD JPY, like gold. So you begin to see all those pairs like that. So they are the one that dominates the market that way. So when you begin to trade, don't start your trading career by trading pairs like USD CNY or USD, I won't say the rest, but make sure you start with the one that is very common that everybody trade, Euro USD, GBP USD. Now, what are the basic terminologies in forex? We have things like pips. You hear terms like pips. How many pip are you targeting? How many pip is your stop loss? How many pip is this? Meaning that pip is simply the smallest unit of measurement in forex, representing the price change in a currency pair. Meaning, when you enter, probably you buy Euro USD at 1.245 now, and it moves to 1.257. So from 245 to 257, 45 to 57. The difference between that is the pip. You get it now. Those little figures there is the pip. So you may have a profit of, let's say, 50 pips, 100 pips, and the likes like that. So that's how we calculate that. But in the course of the training, we are still going to teach you how you calculate that very well. We also have lots. What does lots mean? Lots mean that the simple amount you want to buy, so, or buy or sell, the standardized trading size. You get it now. Size you want to buy or sell. You hear things like 0.1 lot, 0.10, 0. This, or 1 standard lot. You get it now. Or 20 standard lot. It depends on your account size. That's what determines your lot size. Also, you hear things like trend. What trend is the market now? Is an uptrend? Is a downtrend? It's just a sideways trend. What does that mean? Meaning, when we have uptrend, meaning that the market is going up, the price is increasing. So in an uptrend, you buy. When you begin to hear, oh, it's going down, we are in a downtrend, meaning the market is selling. In a downtrend, you sell. When you hear things like, oh, the market is just ranging, meaning it's not going anywhere, it's just dancing in between. When it comes to the range market that way, you stay out of the market. So you also hear things like time frame. What does that mean? It simply means the current relationship between price and time. My colleague is still going to show you that, meaning this market has a direction. It has the way it moves, like we have our S and Y axis. So when you have your S axis where time is, and you have your Y axis where price is, so it moves in that direction. So that is time frame. So on time frame, we have maybe 1 minute time frame, 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hours, daily, weekly, and even monthly time frame. You get it that way. Also, you hear things like stop loss. Do you set your stop loss on your trade? What does that mean? Your stop loss simply means that when price come against me to this level, let it take me out. I'm ready to take this loss and out of the market. Also, you hear things like take profit. What does that mean? It simply means that when price goes to this level and it gets to this particular level, whatsoever is the profit, just let me pack it and go. You get the point now. So in every trade, you have to set your stop loss and your take profit. So those are the basic terminologies we are going to look at. Thank you very much. That's just a basic introduction to the forex. And now my colleague will be coming to take us the major thing we would be using, giving us the structure and the indicators. Thank you very much. Cheers. God bless.
Morning again. Good morning. What happened now? Excuse me. Morning, everybody. Online community, good morning. So we have absorbed a lot of theory. This time we'll be going straight to the meat of what we came here for. Now, I just have to say this straight up. Whatever I'll be teaching today is very, very important. It's one of the biggest things I wish, when I was starting my trading journey, I had this. It's a big push. It would not turn you to a millionaire overnight. Nothing will. And if you do not have your pen and paper to write, after today, you forget everything I say, and you go back to square one. So the plan or the aim of today, of this particular session, is to get you started with trading. You start your journey, and then with consistent practice, if you do not practice what I'm teaching you on a demo account, or you backtest it, and forward test it, backtest, forward test, going back into the chart and seeing it again. We all know that this term, that repetition makes it a habit. Your eyes have studied it to the point, even when they wake you up from sleep, you know you're settled. So you need to understand that whatever I'm teaching would require you to go back and study and study and study until you get it. The way people are looking at me is like, after here, Hope everything is fine. We did introduction. I'm expecting smiling faces, and somebody's there looking at me. If you don't teach me well, take it easy. Don't worry. Whatever I'm teaching you, it works. It works perfectly. If you follow the rules, it works perfectly. Are we all okay? And meals are serious. Guys, chill. How many of us have traded live money before? Just wave. Live money before, just wave. 1, 2, 3. Okay, just 3 of us. How many of us are completely new to the trading world? Okay, okay, good. So you watched the previous video. Who received an email showing how to install the indicator and how to get registered? You received? Have you set up your chart? It's set up. Good. Who else? Okay, whose chart is not set? Raise the hand well. Raise the hand well. Be confident. No problem. Your chart is not set. Okay. But did you get the email? You didn't get the email. Nice. So we have to start. Okay, this is what will happen. You have to be registered with a broker. You have to get a demo account. And then we'll now move down to installing the indicators. If you are not with your laptop or your, just indicate. Be confident. We are together. Fine, fine. I'll go through the process and then make sure you write down your emails for those of you that didn't get it. We'll send the videos again for you so that you can install it. But right now, I'll be moving straight to installation of indicators. If you do not have the indicators installed on your platform, that's what I'll be doing now. As to how to get registered with a broker, our preferred broker is Equity. There's a video for it. We'll send it to your email, make sure your email is down, and you watch the video and get registered. Now, when we start with our platform, this is Equity MT4 platform. There is a simple step as to getting here with a demo account. Everything I'm teaching you, practice it on a demo. Do not trade live until you've had a period of a sequence of consistency moving forward. Do not trade live until you are sure that you now understand it and you've now seen demo results. If you rush to trade live, you rush to go back to demo. So this is the platform. I'm going to be showing you the indicators we use and how we use them. If you have not had it installed, online community, if you've not installed it, this is the opportunity again. There's a video for it, but if you've not installed it, this is it again. Don't worry, just reserve your questions. After the class, we'll move forward to asking questions. Now, I have you, when you get it, it will be in your email. Download it into a folder where you remember. I have mine, I think, the document, Sunshine. No, that's not it. Excuse me. Okay, so my own is inside my Sunshine folder. And we're using 3 indicators. We're using 3 indicators. Okay. But for those of us that are coming now, we have to pen our name down and your email. And if you do not have a laptop at the present, go back and watch the video. And then you could also put down or write down the processes. Write down the processes. Excuse me. Okay, this way. This is too bright. I cannot see. Where's the Sunshine folder, please? You have to also use this one. Okay, open it. That's not the folder. Okay, the folder. Yes. You also have to help me reduce the brightness. That's it. The brightness, please. When you talk to video for me, these guys that just came in. It's here. Yes. Talk it a little. The brightness. Thank you. Yes. Thank you. Can we still see the screen? I want to understand what's going on. Is it the weather? Is the weather? You can't absorb or assimilate what I'm trying to teach if you are like this. But no, no problem. We'll get into it. It's fine. So we're using three indicators. We're using the TMA, we're using the Fibonacci pivot, and we're using the semaphore. And we're using the semaphore, which is also a sunshine indicator. This is also our sunshine indicator. And these three indicators are super important, and I'll explain what they are. Then there is a template already. A template, I'll show you what a template is. That is saved. You do not have to start setting. We did the work for you. Okay, which color, which one. You can do that by yourself if you still want to. But this template makes the indicator, because every indicator has a setting. The way we use it, the exact setting we use it for, and how it is in our charts when we are trading is set for you. We put it exactly here in the template. These are the indicators we'll be using. On this chart, moving forward to how we set it, let me show you what the template is before we move forward. Look at my chart. This is a plain chart. I created this template. By default, when you download your equity platform and you now have a demo account, by default, you see your template should be one of these ones that came with it. Something like this. Okay, no, this one is us. Or whether this is also us. Something like this. Template is how your chart is already preset. I'm giving you a beginner tutorial. You can watch it all on YouTube. We also have videos on that. Join our YouTube channel, subscribe, and then get used to this concept. Templates are just preset settings for your chart. Now I want to set a template that says sunshine. Three indicators now. Those indicators will not appear on your chart because they are custom indicators. This indicator is the moving average. This is the ADX, the average directional index. This comes with the MT4 platform, but the custom indicators were made outside the MT4 platform, and we now install them. That's why they are custom indicators. They need to be installed here. So this is how we install custom indicators. You come to File. I've done a video. You can check it out. If you don't have it in your email, write your email down. We'll send it to you. Come to File. Move to Open Data folder. It opens up a folder. Move to MQL4. Then move to Indicators. These are the indicators that come with the platform. This is where you now install the custom. Custom means we made it ourselves. The custom indicator here. And if you remember, I opened the folder here, so I'm going to copy the indicators, the three of them. Ctrl-C, or you right-click and you copy. I'll just use Ctrl-C because I want to be fast. Then I go back. Then you paste it. Ctrl-V. See the indicators. This is hash times 4, semaphore. We have Fibonacci pivot. This is your intraday support and resistance. I will explain. Don't worry. Then the TMA, the true moving average on the chart. Now I've installed this. The next thing I want to add here is my template. My template is preset. The sunshine scalping template. I copy it too. I come back to this part. Now I go back, or you could just, let me close it so that it sinks into your mind. I've copied this. I come to File again. Open Data folder. Very simple, very simple. Then you move to Templates now. You do not go to MQL4. There's templates here. You want to paste the template, not an indicator. Boom, pasted. Now I will close my platform. Sometimes you just go to Navigator and refresh. You can also close your platform, open it back. Oh, sorry. This isn't what I intend to open. What's this? Equity. Good. I'm opening my platform. Why did I close it? The things I saved sometimes will not appear until you refresh or you close it and open it now. Now, you come to this star button here. That's your navigator window. This is where you install your indicators from. Before, my semaphore was not here. Now it's here. I think I installed it twice even. You also see that my TMA is now here. My Fibonacci pivot is now here. I don't need to start dragging or putting them on the charts now. I will just go to a template I saved already. And see the template is here. It wasn't here before. I installed it now. It's here. You click it. Boom. Everything is on your chart. And this is what we'll be using for the sunshine structure strategy. This is for scalping. You could also use it for intraday. I'll be showing you how to use it. But when you set your chart or your platform, this, my friends, is what you want to be looking at. This is the semaphore, aka sunshine. This is the TMA band, the true moving average. It envelopes price. If you notice, you see price hits the upper part. Price hits it here, comes down, hits it here, hits it here, hits it here. It acts as dynamic support and resistance and envelopes price. Then the Fibonacci pivot acts as daily support and resistance. Who does not know what support and resistance is? Okay, I'll give a brief explanation, but there's a video for it, again, on our YouTube channel. Subscribe, watch the video. But briefly, support and resistance are price levels on your chart where you expect price to change direction. For support, acts as a floor. When price gets to that floor, you expect price to change direction. So this is a support. And our Fibonacci pivot has helped us identify possible areas of support where price is going. Look at how beautifully price went there, hit it, and then went up. This strategy is super simple. This is one thing I love with our CEO, Pastor Ejimi. He's really good at making things really simple. This strategy is very, very, very simple. If you understand it, if you know how to use it and demonstrate it, this is the step you need. Excuse me. Okay. Online community, if you have a question, drop your question in the comment section. I will attend to it as effective as I can. Also, if you're here, if you have a question, be patient, just write it down so you don't forget. For online community, if you have a question, if you are stuck anywhere, just ask. Also, if you are online, you can share the link to your friends and your family. Those who you want to be involved in the class, just share it. So moving forward, resistance act as a ceiling. Support, floor. Say it with me. Support is what? Floor. Resistance is what? Ceiling. Support is what? Floor. Resistance is what? Ceiling. So when price gets to a ceiling, you expect price to hit it and turn down. These are basic trading concepts. If you do not understand the law of support and resistance, your journey will not even start. You must understand support and resistance to even get started in trading. The floor is where price bounces off and moves back. I'm sure if I move back, we'll see something like a resistance where the price went there and then it turned. So the Fibonacci pivot helps us identify it. The true moving average envelopes price, and the sunshine is what inspires our trade. We are not trading until this guy appears. When you see the sunshine, that's when we're ready to trade. That's when we are even interested in a position. So all this movement of price, we're not interested until this guy appears. You understand? So I'm moving little by little. I'm explaining their uses before I go and show you exactly how to use it. Because trading, you need to have a checklist. What we call a checklist is like when I want to cook. I need ingredients. I need salt, I need pepper, and then it depends on the type of food I want to cook. So if I want to sell, there are exact, precise step-by-step. This is why traders lose. The inability to follow your preset rules is why you lose. You have a question? You have a question? Okay. The inability to follow your rules is why traders lose. So when we carve out a rule for you, especially if you're a beginner, you are definitely going to violate it. But you need to learn to stick to it. The aim is to say, I must follow this exact thing. It's better I follow the rule and lose than doing something stupid and actually making money. Trust me, that method does not last. So moving forward, sunshine appears here. This inspires your trade. This tells you, oh, I'm ready to buy. This tells you, oh, I'm ready to sell. The sunshine inspires your trade. The TMA bands and the moving average now. Let me explain the moving average. They are our trend detectors. They tell us where the market is at the moment. The market is only doing two things, like my colleague said before I came in. See that trending or ranging or scattered. Sometimes the market can be choppy. For those of us that have traded before, you know that the market there are days where the market was just being, I'm not picking a direction. You're like, please now, no, I'm not picking a direction. And the market will just wipe you if you force a trade. That's why we have checklists. If you trade outside your checklist, the market will make you, the market can be very, very frustrating. I say this to new traders. When new traders want to learn how to trade, I'm like, well done. This is one of the biggest steps you want to take in your life. Super important. Welcome to the fold. And the next thing I say, and the next thing is, you are in for a long journey of flogging because the market will flog you. But don't worry, that's why we are here to shorten the learning curve. All right. So, any questions so far? So again, this is the sunshine, this is the semaphore. We are interested in trading when we see what? This. Good. The moving average tells us the trend. Is it down? Look at how the market is sloping downwards. Look at where the moving averages are. I'll explain how to identify the trend using the moving averages, but they tell us the trend. I'm explaining what you see on your chart. Now, the TMA band envelopes price and also tells us the direction of the market. They also act as dynamic support and resistance. Dynamic in terms of I move, as I'm moving, as price is moving, I'm moving with price. Is acting as a floor. Is acting as a floor here. And then he acted as a floor here. He moved. Support and resistance, especially horizontal support and resistance, horizontal like this, tend to be static. They don't move with price. They are static support and resistance. The TMA band and the moving averages are dynamic support and resistance. See how the moving averages and the TMA band, after that support here, after that support here, after that support here, they move as price moves. That's what dynamic support and resistance are. Now, what else is on our chart? The stochastic. This gives us an idea of overbought and oversold levels. If you are not writing and you do not know what I'm saying before now, trust me, you are trying to play with your trading journey. You need to know what I'm saying. You need to have it written down so that when you cannot see me, it's a 2-hour class, guys. There's nothing I will teach that if you do not put down will be in your head now and throughout your trading journey. You need to write it down. Moving forward, the stochastic tells us overbought and oversold levels. If price is overbought, when the market is moving up, we are not interested. When price is oversold in an uptrend market, then we are interested. We want the stochastic to be oversold when we are buying and overbought when we are selling. And then if it's a ranging market, that's fine. We buy at oversold levels and sell at overbought levels. Write down your questions if you do not understand. Moving on to the sunshine scalping strategy. This is what we used to trade. The sunshine structure. This is it. When I start from now, online community, if you have a question, you can ask. Okay, if you have a question here so far, you can ask. So I want to move into the checklist now. Checklist are the ingredients. You need the ingredients to trade. We want to move to the ingredients. I've explained what you see on your charts and their uses. I need to show you how to use them, or the knowledge will be incomplete. Questions? So I take it you understand everything. Okay, you have a question? Okay.
You see, when I don't know too. See like this start, this that start.
Yes. This one.
Oh yeah, it's all over here.
Yes, it's also here. Yes.
On top of it,
Is there? Is here? Is here? Is here?
so I don't know which one is it that this have the shadow of.
Now look at it. Look at the current place where price is. What is this? That's a sunshine. This is now inspiring a sell for you. That's why I'm going to explain the strategy for you. This is inspiring a sell. This is saying, okay, I think I'm getting ready to sell. Don't worry, when we move forward, you understand. So sunshine will appear as long as your chart keeps moving. This one that is appearing now is telling you, okay, I presume the market would sell. That's just one part of the ingredient. Sunshine does not appear if the market is not interested in changing direction. You understand? So if the market is not interested in changing direction, your sunshine will not appear. Now let me move to the... So if you see this, sunshine appeared here, the market sold. Sunshine appeared here, the market did what? It bought. Sunshine appeared here, the market did what? Sold. Sunshine appeared here, the market bought. Appeared here, the market sold. And then the market bought until when? Here. Sold a little, it appeared again, and now it's buying, and now it's appearing again. But this is just one part of the ingredient. You do only this, you will not be profitable. That's why we are mixing everything to ensure that the trade becomes high probability. I don't know if you understand what I'm saying. Any other question? Do you understand so far? You are still confused. Don't worry. We'll move forward, you get it. Yes, ask your question.
So you said how to buy and sell. So do you need like one time open the wallet, just like get to buy and sell?
Oh, okay. You need to, there's a video we did. If it's forex you are interested in trading, you need to start from getting registered with a broker. A broker is the person that provides this platform, provides the liquidity, is the person you give your money to and say, open trades for me, close trades for me. There's a video on that. You know your email is not with us yet. So don't worry, your email is down, we'll send you a video. You need to get started with a broker and open a demo account, an MT4 account. So how to now deposit live and to get started with trading will be explained to you by the end of the session. So don't worry about that. How to put your money and how to start trading will be explained to you by the end of the session. My job is to ensure that you know what you are doing when you now put your live money in the account. Can I proceed? Okay.
Does this setup also work for other players?
It works for pairs that, it works for any pair. It works for pairs mostly that move during session. Every pair has its own session when they move. And I'll be teaching that also. It works for GBP USD, Euro USD, USD Swiss, USD ZAR, exotic pair. It works for every other pair as far as you pay attention to the checklist. You understand? It works for gold too. Yes.
But this stochastic let's say it's when the market is oversold. Then when it's oversold, either you buy or when you buy.
When the market is oversold, what comes to mind? People will finish it. Okay. Yes, sir. When a market is oversold, we have sold it and sold it. We are not interested in selling it, oversold. What else do you want to do? You want to be a buyer. You want to buy low. The market is oversold. You want to be a buyer. That's what it means. Yes.
When it's oversold, does it mean that it's cheaper?
Based off of the trading indicator. The trading indicator is saying, okay, I think it's cheaper now, or it's preferable to buy from here. But listen again, listen very carefully. This is not all you need. We are combining the ingredients together. I'm only explaining what stochastic is. The market is overbought. We are interested in buying from we're interested in buying from oversold level. This is oversold, it sells down. We're interested in buying from oversold level. When the stochastic is now oversold, where's my mouse? Stochastic is now oversold. We're interested in selling from oversold levels. But again, when we combine the ingredient, it will now make sense, because using this alone, look at this. If you had been selling here, yes, you would have made money. But if you had been selling here, you would have lost. Do you see it? Because selling, you're telling the market to go down. Buying, you're telling the market to go up. Selling here, you would have lost. So that's why we combine it. We are combining all these indicators, all these ingredients, to give us a high probability setup. Understood? Understood? So let's move forward. This is the meat of our session. Why don't you come and give me the slides? Can I find it? Okay, you have a question? Okay. Thank you so much.
Yes, kindly explain the stochastic indicator again. That's the first question. The second one is asking, does the sunshine appear and disappear? And the third question is, does the sunshine repaint? I think those are the questions we have.
All right, let me address the first one. You help me open my slide. All right, please go back to the chat for me. Okay, thank you. All right. For the stochastic helps identify overbought and oversold levels in price. The first question says, I should explain the stochastic indicator again. It helps identify overbought and oversold levels in price. When the market is trending, say an uptrend, the market is on an uptrend, we want to be interested in buying when the market is oversold. We will ignore the overbought levels or pay attention to them when they are diverging. I will explain what that is. But we are interested more in buying when stochastic is oversold in an uptrend. When the market is in a downtrend, we are interested in selling when the market is overbought using the stochastic indicator. So stochastic helps us identify overbought and oversold levels. That is what this is. So we buy at oversold, we sell at overbought. The second question says, does the sunshine repaint? Now let me answer this. Most custom indicators repaint. What does it mean to repaint? The market, the indicator can appear here and the market will move higher. The indicator will move higher with the market. That is why I kept emphasizing, you will not look at the sunshine alone and trade, because it repaints. It is the combination of the rest of the things I'll be showing you in the session that will now make you confident and say, oh yes, I've seen this, I've seen this, I've seen this. Tick 1, tick 2, tick 3, tick 4, tick 5. Then I take the trade. But using only sunshine that appears when the market moves higher, like now, when we were talking, the sunshine was here, the market moved higher and it moved higher. Who observed? You observed it too. Good. Who else observed it? I expected you to observe it also, because the market moves higher, it moves higher. So if you had jumped into yourself, by now you would have been suffering through these losses, even if it doesn't hit your stop loss before it turns down. So you have to pay attention to everything I'll be teaching you. Should we continue? Should we continue?
Yes.
Okay. So any question? Any other question? All right. So the sunshine scalping entry techniques. We will use two time frames. The first time frame is the 15 minutes time frame. The second time frame is the 1 minute time frame. And the 1 minute time frame is the time frame we enter on. We'll be using two time frames. If you notice, the first point there says, determine if the market is trending or ranging using the moving average on the M15, the 15 minutes time frame. If you are completely new to the trading world, you might not even know what time frames are. That is why we've done a lot of beginner videos on our YouTube channel. If you're here, you're not subscribed to our YouTube channel, and you do not know what I'm saying, subscribe, watch the videos, learn what I'm saying. But time frames are relatively easy to identify. We are using the 15 minutes time frame and the 1 minute time frame to trade. The 15 minutes time frame inspires our trend. Is the market trending? Is the market ranging? The second point says, for sales. Let me show you what that looks like first of all. I'm going to close a lot of tabs. Now I'm going to be opening, let me use GBP All right. Come on. Good. Now, I will tile this side by side. I'm going to quickly turn this to templates, sunshine. Good. So this is, I will make this 15 minutes. I will make this 1 minute. Good. Now look at this. This is one of most of the things we wish. Remember when I was explaining Fibonacci pivot as this acting as ceiling, resistance. Your sunshine appeared here, but it didn't start to give any significant turn until price gets to this. This is also another confluence. It's just one of it. So when we explain how to use them in synergy together, that's when the strategy itself will begin to make sense and yield for you. Now, we use on the 15 minutes time frame to identify the trend. How do we identify the trend? Let me go back to the slide. Look at this. It says for sales. When we want to identify the trend, for sell setups on the 15 minutes time frame, you want to see the 50 MA moving average below the 100 MA moving average and the 100 below the 200, and the moving averages should be what? Spread apart with what? Sloping downwards. Then what does that mean? It's a sell trend. It's a sell trend. When the moving averages are moving down and they are spread apart. Let me see if I can find a quick example. Good. Look at this. Pay attention to this completely. I wish I could make this bold for you to see. Anyway, look at this slide. Look how they spread. Do you understand what I'm saying? Where is the 50? Here. Let me use the cursor so that the online community too will get what I'm saying. The 50 is here. The 100 is here. This is the 200. Now, on the 1 minute time frame, because some people can be impatient and might not want to look at the 15 minutes time frame, you want price to be below the 400 moving averages, because the 400 moving average is also on your chart. That is why I use this. This is the 400 moving average. When price is below the 400 moving average on the 1 minute, it's a downtrend. When price is below the 50, the 100, and the 200 on the 15 minutes, it's a downtrend. So let's identify the trend. Assuming we were here in price, look at this region. Look at this. From here, what trend is this? So I'm helping you to filter the trend. You might not need price, especially if you're a beginner. Start identifying higher highs, higher lows, break of structure. You might not really understand that for the step from the start. Maybe when you move forward in your trading journey, yes. But to identify this clearly, look at the 15 minutes time frame. The price is sloping down, the moving average is sloping down, they are spread apart. Imagine you didn't see all this part, but at least you were here. You know that currently, when the market was here, before the next open of the day, this is a what? Is a downtrend. We are now interested in selling. Who does not understand? Online community asks a question. Yes. What? I should go through it again. Okay. When the price, there are 4 moving averages on your screen. 4 moving averages. For the 15 minutes time frame, we pay attention to 3. The 50, the 100, and the 200. The settings are there. These are the indicators that are set on this chart. These are the indicators that are here. So the 50, the 100, the 200 moving average, when we see price below them, on the 15 minutes time frame, we are in a downtrend. Do you understand? For a buy trend, when we see price, look at this. Price is above the 50, above the 100, above the 200. Before we got here, we are in a what? An uptrend. So when price now came here, and price is now under the moving average, the 50 under the 100, the 100 under the 200, we are now in a downtrend. So what are we interested in doing when we are in an uptrend? We are looking for buys. What are we interested in doing when we are in a downtrend? We are looking for sells. But we will now go to the 1 minute time frame to look for those entries. We do not enter here. We enter there. Do you understand? All entries are taken on the 1 minute time frame for this scalping model. Ask your question, yes. You can set your colors. Someone is asking the 100, the 50. How do you identify the moving averages and their price? Now, it's because you are new to the trading world, but if you want to identify them, the higher their figures or their value, the longer it takes for them to respond because they need to gather. What does this mean? Moving average is trying to say, take the average of the last price candles. It will take an average of it. The 50 will calculate the average. Oh my God, excuse me. I think I must have unplugged. Okay. Nick, please help me with this so I can continue the class. So the higher their price, the higher it takes for them to respond. Look at this. The closest one to price is the 50 moving average. The next one is the 100, and the next one is the 200. The higher their price, the higher it takes for them to respond to change. The higher their value, sorry. The higher it takes, the longer it takes for them to respond to change. So the 50 responds quicker, is closer to price. The 100 takes its time. The 200 takes more time to respond. Do you understand? So this, if you even put your cursor around it, what does it say? Good. What does this say? Okay.
You have to stay in one place.
Okay. They're doing like they're not understanding. This is what? The 100. Good. Okay. Then when you move to the next one, you notice it's the 200. So move your cursor on it, and it will tell you if you still do not understand what I'm saying. don't have anything. Okay. What about you, sir? You have this exact thing. Okay, but did you get an email from us? Why did you not install it? Who else? You? Okay. But, so what is here is different? We are using the template social status. And then what is here is different? Okay. You know why I'm emphasizing this is because everybody attempts to it. You go and you come back, there's nothing. I mean, it will now seem like, oh, it was not taught for, you didn't learn more, or the knowledge was not. Most of the work is now on you after this 2-hour class. So, I hope the online community can hear me. So, as I was saying, you can attend trainings and you need to learn to practice yourself. So that's why I'm emphasizing who has it, who is moving forward. Now let's proceed. So this is how we identify the trend. And now I showed you clearly on the chart how this is an uptrend and how this is a downtrend. Because price moved up, the moving averages are sloping upwards and they are spread apart. The 50 being higher than the 100, 100 being higher than the 200 and spread apart is how you tell an uptrend. And then for the downtrend, the 50 being below, the 100 being below, the 200 being above them all, and price being below is a downtrend. We can identify that trend. Now we move to the 1 minute. And the 1 minute is here. To identify a trend, look at this is the 400 moving average. Let me move my cursor on it. You see, it takes longer. It takes longer to respond to price. And see how price was sloping. Let me zoom out. 4,000, sorry, I said 400. 4,000 moving average on the 1 minute. Now, why is this so? Because some people would not like going to the 15 minutes to go and identify the trend, but you should. Now, the 4,000 moving average, when price was, let me do this. When price is below it, we are interested in sell setups. So when our sunshine appears above, when our sunshine appears below, we are not interested in buying. These are the things that help filter your trade. So when you say, I'm seeing sunshine appear everywhere, are you with the trend? If the sunshine is appearing when you are against the trend, you are not interested in that trade. I'm giving you high probability setups. Sure, the price will move up. Sure, the price could move up. But if it is not with your trend, ignore the setups. So in a downtrend, on the 1 minute, ignore the sunshine that tells you to buy. In an uptrend, on the 1 minute, ignore the sunshine that tells you to sell. So when price is below the 4,000 moving averages, on the 4,000 moving average, on the 1 minute time frame, when the sunshine appears here, I am not interested. Even if the market goes up, that's the market. I'm interested when the sunshine appears here, above. Now I want to sell. Now that's just one of the ingredients. So moving forward to the slide, sorry. Good. Next step, so far we understand. Online community, so far we understand. Next step. The checklist on the 1 minute. This is what gives your entry. It says wait for sunshine to appear where? Where? Above price, not below. You wait for it to appear above price. We are now in a downtrend. We've confirmed from the M15 how, when we looked at the moving averages, they were sloping down and spreading apart, and then price was below it. And then we went to the 1 minute. We now saw that price is also below the 4,000 moving average. Then we are now interested in selling. So what now says sell? We wait for sunshine to appear above price. Currently above price. Then what next? We now wait for price to what? Why is my screen this way? We wait for price to cross the 100 moving average. Notice we didn't mention the rest for now. We mentioned that price should cross the 100 moving average. Where? Downwards, not upwards. What makes traders lose is inability to have a checklist and to follow it. This is your checklist. This gives you high probability setup. This is what you want to see. So when you do not see them, what do? I wait. The market is always moving. 24/5, which means for 5 days, 24 hours, the market is always moving. If you do not pay attention to your checklist and you jump into a trade, you will lose. Moving forward, you wait for price to cross the 100 moving average, sloping downwards. Then you wait for the TMA band to cross the 100 moving average downwards. And then when do you enter? I want to hear it. I want to hear it so that you don't go and do something else after you move from this place. Why is my screen? Enter. There's only one person that is in class. Let's all read this last line. That's your entry. There's a reason I'm asking you to say it. So that when you place a trade and you ask yourself, did I enter when price is coming from overbought region when I'm looking to sell? Why is my screen misbehaving? Excuse me. Okay. Later, please, I'll need CJ. So that's why I'm asking you to say it, so that it will sink inside. So let's move to the chart. Now remember the checklist. We'll be coming back to use it. Remember the checklist. We'll move to the chart now. Okay, I have an example. Your stop loss says, your stop loss says, what is stop loss? Okay, you don't know what stop loss is. You know what stop loss is? Good. Exactly. Stop loss is the amount or the pips you are willing to lose when the market does not go in your favor. And yes, you must trade with a stop loss. And you will endure the losses. Take profit is the amount you are willing to make when the market goes also in your favor. When the trade finally goes in your favor. So the stop loss for your trade, if I sell and price goes higher, it hits your stop loss because you expect price to go down. If I buy, I expect price to go up. So when price does not go up and starts going down, that means it's going against you. And your price will hit a stop loss. That stop loss is saying, take me out here. You understand? And the markets, we don't just use stop loss emotionally. We say, me, I'm ready to hit $5. Or I'm ready to make $100 in this trade. Your take profit and stop loss is determined by the strategy you trade. I'll be showing you exactly how, if possible, when you get it set up, I want to place a trade for us to see it. Make sure all your trades are on your demo account. So your stop loss is placed above the sunshine that inspired your sell. Write it down, everybody, if you are writing. Place stop loss above sunshine. For a sell, we are looking to sell. Stop loss above sunshine. Then we take profit, we take profit when an opposing sunshine appears. So I'm selling, sunshine appears up, I now everything aligns, I now start selling. When I now see a sunshine down, that says, okay, the market will start buying, you exit yourself. That's one way. The second way to also exit when you are in profit is when price gets to a Fibonacci support. Because Fibonacci support tells us that price could buy from here. So you take profit when sunshine appears opposing to your trade. And you also take profit when price goes to hit the Fibonacci level. We'll show you that in an example, but you must understand it. Okay. I have 30 minutes left. Okay. You said?
When you said you take place stop loss and hold sunshine.
Yes, for your stop loss. Stop loss is where the amount you're willing to lose when the trade isn't going in your favor. So for your stop loss, you place your stop loss above the sunshine because the sunshine appears for you to sell, right? You place your stop when you are now everything aligned, you're now in sell. You place your stop loss above that sunshine. You take profit when an opposing sunshine appears. That's when you take profit. When an opposing sunshine appears, that's when you take profit. That means when the sunshine appears for you to buy. I don't know if you understand. That's what we mean by an opposing sunshine. Alright. Okay, you can't charge it.
No, just continue. Let me transfer.
So let's say we want to make a trade now and we want to make a sell trade. What's the first step is? We want to trade. We come to our chart and we are interested in, or we want to start selling, or we want to see something that says we should sell. What's the first step? So the first step is your trend. You identify the trend. I come to my chart and I see. How do I tell what the trend is? The moving averages, okay? So how do I use the moving average? On the 15 minutes, good. Yes, you want to use moving average to check. So how do you tell what the trend is? Let's assume it's a sell trend. What do you want to see?
I want to see the 4,000